Most operations have expenses that are not readily traceable to specific jobs, departments, profit centers, or other production details you might be maintaining. Overhead expense examples are insurance, depreciation, supplies, utilities, repairs. Even though overhead expenses are not directly related to any specific area of your operation, they still play a part in the profitability of each area. Account distributions can be used to automate the process of expensing overhead to the different details in your operation. Account distributions can be done by a percentage, or if you're using CenterPoint accounting for agriculture, distributions can also be done on a per acre, per head, or by units of production. In this session, we're going to be doing account distributions by percentage. Account distributions are added under Setup, Accounts, and Distributions. We have a couple of distributions already on the list. We're going to click New to create a new one. And we can give this an abbreviation and a name. We're going to call it Overhead Expenses and by percentage. And you can inactivate distributions that you don't use any longer with that active box. The detail is if you want to give some information here of what this distribution does compared to other distributions you might have on your list. You can have as many as you need. Your different expense accounts might need different percentage proportions when you for that particular activity. So the accounts that you assign will be to the distribution that has the right formula for that particular account. We're going to now go to the distribution detail, and the first thing that we do is click New to create this portion of the distribution. You can have as many different portions in the distribution as needed also, and I'll show you that in a minute. So we're going to click New, and we're going to give this a name. So in this particular business, they are a sporting business, and they sell equipment and service, and they also do memberships. And they want their memberships a different portion than the portion that's assigned to equipment and services. So we're going to call this portion of the distribution Equipment and Service. And the type is percentage. The timing, you have an option of either at transaction or later. And the difference is if it's at transaction, then when the transaction posts, it's going to apply this formula that we set up for the percentages and divide that out into individual journals with those details assigned at the time that you post the transaction. If you do it later, then it is simply tagging the individual transactions with this account distribution, but it's not splitting it out until you run a transaction under Processes Periodic and Apply Distributions, and you run that at the end of the month, and then it gathers all the activity to all the different accounts that have distributions assigned to them with later, and then it will do that split at that time and create the journals, which means that there are far less journals if you do the later, if you have a lot of transactions. And the other benefit is if you have a case where you're not quite certain that the percentages are what you really want them to be during the year, they might change, then and you don't want to assign the details at this time, then you can do later, and when you're ready and you have those percentages, you know what you want, you can then go back and run your monthly distributions, even though it might be the end of the year. So that's just the difference on which timing that you use. The percent of the total amount is now going to identify how much of this particular portion that we're going to assign out do we want of the whole. So out of the whole amount of the expense, we're going to say that we want 70% of it going to our equipment and service, and now we're going to identify what pieces go with equipment and service. So we have a profit center of skiing and equipment service, and we also have different locations. So we're going to be identifying locations here also. And we have these different locations, and we're going to select the Colorado store, does the skiing, and out of that portion, we're going to give them 35% of the total. So the percentages that we put in this grid for this portion need to add up to 100. It's getting 70% of the whole. The group that we assign in this grid is 70% of the whole, but the percentages within the grid need to add up to 100. Now we're going to go on to one of the other profit centers. The Colorado store is the only one that does skiing, but we have a biking. And so in the biking, we're going to do Colorado there also. And Colorado does, let's say, 13%. And then we're going to do biking again because we have a couple of stores that do that. We're going to say that Illinois does 17. And we have a Minnesota store that also does 13. And we have also some fishing. And in the Minnesota store, we're going to do 15. And in the fishing Illinois, we're going to do 3. And in the Colorado, we're going to leave that at 4. It keeps wanting to put the remainder so that it adds up to 100. So now we have 100% totaled up here and divided out to these different divisions of our profit centers and locations. So we're finished with that one, and now we're ready to add our other portion of this particular distribution. We're going to click New again, and this one we're going to call Membership. It's at percentage again and at transaction and 30%. It defaulted to that because that was the difference from 100. And in this profit center, we have membership again, and we have that at all of our stores. So at Colorado, we're going to do 50. And, at Illinois, we're going to do 25. And at Minnesota, it defaulted to 25. So now we have these again adding up to 50. When we do our test, we can test this out. If we click our test button, we can see what would happen if we put an amount in here. So let's put $1,000 so it's easy to see, and click distribute. And now we can see how the dollars would get divided out on our setup that we did. So under equipment and service, we have the grid here. Let's pull this down a little bit. There we go. We can see how the different profit centers for our equipment and service are divided out, and 70% of the 1,000 went to that, and $300 went to membership and divided out with 50% to Colorado and 25% to Illinois and Minnesota. So that's just verifying that these percentages that you put in look like that's what you want happening in a real transaction. We're going to close that. And we are ready to save this transaction. If you wanted to delete a portion because you wanted to start over, you can always highlight one and delete. Or you could clear a row in here. If you added an extra row and you don't need it, you could clear that row. And now you are ready to save this distribution. So that is one distribution where we used a percentage and divided it into 2 portions. We're going to look at one other distribution. This is using fund accounting, and it only used one area but listed each one of our different departments that are being used in this particular fund accounting for a village, and listed a percentage of each department that is supposed to have a portion of the overhead expenses. Once you have these details for the distribution, then you can go to assign accounts, and you're going to be assigning which account you want using this particular distribution and which company or fund. So this fund has different funds or companies, and each one can have a different accounts assigned to it. And when you assign the account, you would highlight it over on the left-hand side and move it to the right. And that shows us that now, every time we use our maintenance and repair, the default distribution is going to be overhead expenses. And we can assign as many different expenses over here as needed. And we can go to our different funds or companies and select the accounts that we want for that particular fund or company to the left, from the left to the right. And when you're done, you're going to click Save. And that will finish your distribution. And the next time that you use one of those accounts, it will come up with a distribution button that will be orange once you put the amount in, and I'll show you that real quick. In our database where we created that overhead expense by percentage, let's do a payment. I've assigned the account of electricity to our overhead expense by percentage. And now let's go over to payment and use that account of electricity. And we're going to put in $1,000. And as soon as I put in the $1,000, you'll see that I have a distribution button that turned orange, indicating that I have a distribution assigned to this transaction. If you don't have distribution on your grid, you can right-click and do Add Remove Columns and add that column for distribution and then position that where you want it. But if I expand out this entry and see all the journals, I can see, because I did it at transaction, not later. If I did it later, you wouldn't be seeing this split to the different details. It would only tag that transaction. But in this one, it was at transaction, so I'm seeing the split out to all my different service and equipment and my membership based on the amount that I entered and the percentages that I had on that account distribution. If I click the orange button, it then lists it also, and I can expand each one of these pieces and see what happened in this distribution. If I had been doing a distribution at later, to run the apply distribution, you would go up to processes and then periodic and then apply distributions. And then I could create a new distribution and click OK. And I do have a couple of entries out here that I did with a distribution that I am using at later. And here it is applying that detail that I had on that activity, which was entered in the month of January. So it's only looking at the entries for January. You would run your apply distributions at the end of every month. And that is how you can distribute your overhead costs and not have the details to be entered manually.